Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video on Uber Technologies, ticker symbol Uber. Now, I will say that all of my videos are very opinionated and should not be financial advice, but I think this one's going to be especially interesting because I think that there's two perspectives you can take on Uber that I think are pretty close to equally as likely. And it's really up to the individual to decide if they want to take on the risk of underperformance. Because I do think that this stock could be something that really integrates well with the self-driving, but you have to really believe that the self-driving is going to be coming in the next 5 to 10 years to justify the kind of risk to invest into this stock. But in the past, this stock has grown very easily. I think that the software is very valuable. And I think that if the self-driving does actualize, this is the most likely, company to be able to profit because they've already built the infrastructure for the self-driving or for the users to register to be able to be driven somewhere, It's not going to be the automaker that comes out with it. I mean, sure, they're going to sell some more cars and I'm sure they're going to be popular, but everyone else is going to obviously catch up and it's going to be competitive, just like it always is. It's a very negative industry to be in. It's very competitive. You get sued very often. The margins are not good. You have to deal with all this political pressure. You see that with the Japanese auto manufacturers. But if you're a company like Uber, you get good margins, you have to pay your employees, but you don't pay them as much as you're making. You're pretty protected from lawsuits. Honestly, very strong, very good business, very monopolistic. You do have competitors like Lyft, but Uber is the one that has the most users. Uber is the one that is, the most valuable, the most well-known. And I really think that 188 billion is not too bad of a price based on the cash flows. That is, of course, the current market cap. It has a PE ratio of 15.69. The 52-week high is 97.72, and the 52-week low is 54.84. So we are trading near the 52-week high. I will say that if you think that Uber can't get into anyone else's phones that could use it, you could use that as kind of a bearish argument as well. That's kind of something I was thinking through. But maybe this is really undervalued because it looks to be undervalued based on the metrics that I'm looking at in terms of the cash flows. In terms of the average revenue growth, it's got 30.18% on average over the last 5 years, including the trailing 12-month number. I think that the business is very strong, and I think that this is a very strong, advantageous type of company. An analyst thinks so too. So we have 54 analysts making a rating on Uber Technologies, ticker symbol Uber, and 13 of them rating it a strong buy, 30 rating it a buy, and 11 rating it a hold. Their price targets range from 76 to 115, so there is a lot of volatility with this stock. I will say that. It has a pretty high beta. I don't think you're necessarily getting it at the low, obviously, because, again, we are on the high end of that 52-week range, so I don't know if it'd be worth justifying the risk, but it is at a pretty attractive price to earnings for the fact that it's essentially a software company, and it's so ingrained into the modern life that I really think that this could be a huge benefactor from AI technology. So I think I'm more honestly on the bullish fence with Uber as a whole. I would like to see them really get into more countries and expand in that way. I think it's a very interesting company, and I think if we do get the self-driving, this is going to be just an extremely valuable company to be a shareholder in. So I think it is worth the risk, but let's go over the DCF model to kind of give it a look over. Here we can see the weighted average cost of capital that I found for Uber. It's 7.97%, and again, it's because of that high 1.39 beta. This stock loves to move all over the place, jump around everywhere, and you could definitely see that reflected. Now, what I do like to see from Uber is that it's very, low debt weighted, high market cap weighted, meaning equity weighted. So that is a very positive thing to see. You know that they're not really in any kind of trouble of their debt being recalled. And they are a very profitable company, as we can see in the free cash flow. As a year and overall, they've kind of gotten out of the negative years from 2021 moving onward, and they've just made more and more money. I think that they're going to continue to make more money, but I do think that, if the self-driving does not come, that's definitely going to hurt Uber. I think that you were getting it definitely at a much better price when it was much lower. I kind of talked about this before, and I've talked about it on the channel other times. I think that the time to get tech was, earlier. I think that tech is still going to perform very well, but I think that a lot of people kind of missed their opportunity to buy tech because they got so caught up in the negativity, so caught up in everyone telling them, the sky was going to fall, that the tariffs, were going to matter in some meaningful big way. Like a lot of things, it was blown out of proportion, and I think people panicked for really no reason. And the long-term investors did well, I will say that. I think that over time, we're going to see a lot of money moving up. But now that tangent's over, I put in a 7% growth rate here, and we can see that that's around what the expectations are at. The average free cash flow growth rate is 181%. Now, obviously, this could be skewed because they could be paying back debt, doing other things with the cash. But the average revenue growth is 30.18%, which is very excellent. But it makes me think, how many more years is this really sustainable, this level of growth? Because now they're starting to get to a really high valuation, and I don't know if they're going to be able to maintain that very high level of growth going into the future. And this is obviously an average, a lot of this. I didn't go individually by a year and do what I expected growth to be. But I would imagine they have more growth now, and then they're going to come into less as they continue operating as a business. But who knows? I mean, technology moves very quickly. I mean, maybe Uber could get phased out by some kind of AI. I don't know. I think that there's value here. I think that it is probably undervalued for what the business is and what it can turn into in the next 3 to 5 years. But I don't know if I want to pay the premium price for it, because I also think that other things are undervalued and being overlooked. And I think that Uber is it's starting to become very favorable within Wall Street. It might be time now because they are proven as kind of the leader in this space. I think that there's probably less risk buying into Uber now than buying into Uber 10 years ago when, Lyft was a bigger competitor. I think that the moat has gotten probably deeper. I think that it's a quality business. Man, this is difficult. I'm like talking myself into it because I'm kind of doing this for me. I don't know which way I want to go on this, because I think that the average growth rate is going to be slightly higher. I think it could be an 8 or a 9%, which would imply that it's undervalued. I mean, let's try 10. That means it's 22% undervalued, but I don't think that 10% is really realistic for the last 9, or for an average growth rate for the next 9 years. But they did get 30% for revenue, but the trailing 12 month is, I'd say they hover around 17. So I think realistically, probably 9 is like a good growth rate. Probably 100 or below, I can't really blame you for buying Uber, just based off of the current information I have as of the date of recording this video. I don't think you're necessarily getting the most amazing deal in the world, but I do think that this company will do great over the long term. And I think I want to build a position in this. I think it's probably the flagship leader. I could just throw, 1 share a month or something over time, and eventually I'm sure it'll grow just a little bit here and there. So yeah, that's kind of my review. I think that it probably is a good buy. I think that it's probably worth something, between the 90 to the 105 range. It's worth somewhere in there. But yeah, I think below 90, Uber's okay. I think there are definitely some better value deals, but Uber seems good at around this price. So that's the review. Thank you for watching. I appreciate you guys watching the video, leaving a thumbs up, hitting the subscribe button, and checking out some of the other videos. Have a great rest of your day. Bye.